All right, and we are live. Happy Friday, everybody. It is Friday, October 1st. Summer is officially over. Just wait 1 second for a couple of people to join on here. Make sure we got sound. All right. Happy Friday, y'all. Almost the weekend. Not quite. Not quite. And what a week it has been. What a month it has been. September is over, and it was the worst month for the S&P 500 since March of 2020. And for those with short-term memory loss, March of 2020 was a rather doo-doo of a month, if you can remember that. Um, let's. We have a lot going on today. I mean, for the first of the month, it was a fantastic day. It's not over. The Dow was up almost 500 points the last I looked. Bitcoin, for some reason, is up 10% today, or almost 10%. I don't know what is going on. I was looking all over the place in the news trying to find some explanation for Bitcoin being up 10% today, and I found a whole bunch of nothing. All right, I don't know what is going on in the crypto market. I'd love to be able to sit here and say, aha, I know what's going on. It's this, and feed you some kind of baloney. But, folks, I am stumped. I don't know why it's up 10% today. But we'll get into that later. The debt ceiling nonsense continues. My recommendation on the debt ceiling has always been to put a clothespin on your nose so you don't have to smell all of the BS and the political crap that is going to be flung back and forth over the coming weeks prior to the inevitable raising of the debt ceiling. Real estate trouble continues in China, and there's some real energy nonsense going on in the world. What this energy crisis just, I'd love to say it came out of nowhere. I guess we could have seen it coming. But, man, it seemed like a year ago oil was negative and we were looking for somewhere to dump it. So I don't know what's going on with that. Before we get into all these fantastic stories, guys, I have to ask you if you could please remember to like and subscribe to my channel. Hit that big like button. Hit that notification bell. It really helps me out. It helps me to keep this channel growing, and I would be forever in your debt. And now it is that time. It is time to shrink my big, fat melon of a head. And the first thing, this is for you, Mr. Mike Robin. Since you asked, I wasn't going to talk about this, but here it is. Janet Yellen lends support to the effort to remove the debt ceiling altogether. Now, look, I get it. The debt ceiling is a symbolic thing, right? We're not going to default on our debt. I said it last week. There's a non-zero chance that we default on our debt. You know, there's always that 1/1,000,000th of 1% chance that we don't do it. But, folks, you know, I could get hit by a meteor as I sit here and live stream to you right now. It's not going to happen. It could happen, but it's not going to. The debt ceiling is going to get raised. However, I am definitely not in favor of getting rid of it outright. As much as the debt ceiling debate is this political BS, like virtue signaling, mudslinging festival of political stinksmanship, it has to happen. At least every couple of years, we need to get together and at least pay lip service or pretend to give a shit about future generations. All right? Even if it's just this symbolic gathering with a predetermined outcome, at least every couple of years we need to get together and go on the record and say, yeah, kids, grandkids, great-grandkids, in fact, we did do this to you on purpose. Yeah, we were that selfish. We were that greedy. We did spend every dollar you're ever going to make in your lifetime before you were even born. Somebody, you know, this debt ceiling debate forces us to do that, all right? And even if the outcome is predetermined, I think we owe it to future generations to at least have the conversation. And you never know. Maybe at some point, call me a hopeless romantic, folks, but maybe at some point somebody in Washington is really going to care about this subject. I know, it sounds ridiculous, right? I mean, we have Rand Paul. We have one guy. Anyways, folks, that's as political as I'm going to get. But that's what I have to say about the debt ceiling. it's a predetermined outcome, but it forces us to have this conversation at some point. We need to take it seriously. All right. With that said, let's move on from this subject with all available haste. Here is the S&P 500 up 61 points today. That's almost 1.5% after an abysmal September month. The Dow is having a good day also, up almost 600 points now. It looks like it's rallying even further going into power hour. Again, a lousy September. We started around 35,300, so we lost almost 1,000 points in September. But look at that lovely, lovely one-day chart. I don't know what we're looking at here. This could be portfolio rebalancing. You know, it's the first day of the new quarter. That could be what's going on. But you know what? I see a sea of green all over the market today. Everything is up. The Dow, the NASDAQ, the S&P, gold and silver, crypto. Heck, for all I know, even Chinese real estate is up today. So maybe people are just feeling optimistic. I couldn't really tell you. All right. Another thing I wanted to draw some attention to, I talked about this in a video earlier this week, that we were going to see a big spike in reverse repos at the end of the month, and we saw that. We saw that $1.6 trillion reading on Thursday in reverse repos. Again, that's the end of the quarter, so that is an expected outcome, and you'll notice it popped right back down to around 1.3, almost 1.4, just as soon as it happened. Now, I said it in my video earlier this week. I think the reverse repo story will go away as soon as the debt ceiling is raised. And what the reverse repo is telling us, what this chart is telling us, is two things. Number one, the market is flush with cash, our cash, which is a liability for the banks. And the banks need to hold collateral for our cash, which is usually treasuries. And there is a shortage of treasuries because, see earlier discussion about the debt ceiling, the government hasn't been able to borrow all year. So as soon as there is the debt ceiling raised, there is going to be a deluge of new supply hitting the market, new U.S. treasuries. All right, and that is going to have the effect of diminishing the need of the banks to use this reverse repo to park our cash overnight, since they'll be able to get their hands on plenty of collateral. So I think this reverse repo story, I could be wrong here, but I think as soon as the debt ceiling gets raised, you're going to see this come down really fast and then disappear outright, and that will be the end of the reverse repo story. I could be wrong about that, but that's just my call. I think this 1.6 number is probably going to be the highest it ever goes. Maybe, they're saying about 2 more weeks. Maybe we get near that number over the next 2 weeks. I don't think so, though. I think we've probably seen the high for the reverse repo story. All right. Let's see what we got here. I'm just reading a couple of comments. Zeeble Fritz says, these streams keep me sane when I am desperately waiting for the S&P to go down. Well, thank you. I'm glad they keep you sane. I wouldn't hold your breath on the S&P going down. It may, but it may go up forever. I mean, we're in this battle between deflationary death spiral and hyperinflationary destruction of the currency, and we still don't know which way that's going to go. We still don't know what's going to win out. And right now, there's 2 really big powers at play, pulling in opposite directions. You've got the Chinese real estate market that wants to collapse, and that is a $52 trillion real estate market in China that is going to collapse. At the same time, we've got the never-ending trillions and the possibility of negative rates on the horizon here in the U.S. That's very inflationary. These 2 forces are so massively powerful, and they're pulling in opposite directions. I don't know what's going to happen. All right? I don't know which one is going to win out. Maybe the tether that holds the 2 together is going to snap, and they're going to run in opposite directions simultaneously. I don't know. This is unprecedented. The size of the numbers and the scale of these issues, it's never been seen before. Anybody who tells you they know what's going to happen is full of it. So that's all I got to say about that. All right, moving on. This I found today, and this really just, let's shrink me a little bit more. I realize Cathie Wood is kind of like a punching bag these days. Like, a lot of people like to make fun of Cathie Wood, and I guess in their defense, Cathie Wood makes it easy when she writes stuff like this. But folks, let me preface this by saying do not spend your life in an echo chamber, okay? I tend to present things a certain way here on this channel, and you can kind of tell where my leanings are and what my financial beliefs are. Go out and watch other channels that tell you things differently than I tell you, okay? And if you want, come back and say, Jack, this other channel says this, which is contrary to what you said, and I'll go research it, and hey, maybe I'm wrong, okay? Because echo chambers do their occupants a disservice. When you spend all of your time with one person or with only people who think exactly like you get dumber, all right? You get slowly dumber doing that. You need to step out of your comfort zone, and you need to challenge your own thinking on the regular, or you're going to get weak. Your brain is going to get weak. It's a muscle that needs to be worked out like everything else. And people like Cathie Wood do not step out of their comfort zones, do not step out of their echo chambers often enough to hear some of the stuff they say. So I want to read some of these tweets because this just got me started on this energy rant today. According to the EIA, global oil demand peaked at 101 million barrels per day in 2019, dropped to 92 during the coronavirus crisis in 2020, and has rebounded to 97 in 2021. Based on our forecast for EV sales, ARK Invest believe that oil demand has peaked. Okay, she is talking about global oil demand. And she's talking about based on our forecast for EV sales. Folks, if Tesla sells a few thousand extra cars in the U.S., that is not going to cause a global reduction in oil demand. I'm sorry, Cathie Wood. You spend too much time in your think tanks and too much time in Silicon Valley with these guys who maybe they're visionary thinkers, right? Maybe they're the Thomas Edisons of our time. But we still have half of the planet that has not yet industrialized, right? There's something like 3.5 billion people in the world that still burn wood and dung for energy. That's true. I mean, it's like half of the world still does that for their energy. So for you to sit here and say, because EV sales, global oil demand is going to drop, it's nuts. It's totally ignorant of how the world, of how people live. And you also have to factor in mind, oil isn't just used for gasoline. Oil is used to make everything that plastic. Oil is used in fertilizers. I mean, it is used all over the place. And to say based on our forecast for EV sales, no way. This is one of the worst calls I've ever seen. And I was watching George Gammon earlier today, and he was saying his biggest idea for 2022 was to fade Cathie Wood. And you read stuff like this, and yeah, that makes sense, George. I think that's not a bad idea. But going down here, she says, that said, based on ESG mandates, that's environmental social governance, pension funds are demanding that oil companies cut back on capital spending, while U.S. banks, in response to the collapse in oil prices last year, are denying fracking companies of loans for capital spending, and OPEC is holding the line on supply. So there you have it, folks. This winter, when your heating bills double, maybe even triple, you know who to thank. Because Cathie Wood just laid it out for us. Based on ESG mandates, pension funds are demanding that oil companies cut back on capital spending. And it's not just oil companies. It's natural gas companies. It's all traditional fuel supplies. Now, I want you to remember, we did a video earlier this week talking about how wind and solar and all the money we've pumped into it has really just resulted in natural gas growth. All right, there has been some wind and solar power that has displaced some coal, but most of it has been natural gas. And this ESG crowd, these are political appointees who run pension funds, like state pension funds. CalPERS is like the biggest pension in the world, California state pension funds. And they're using their political ideology to dictate where their investments go. And that is causing capital expenditures in oil and gas companies to tank. And that is causing a supply problem when it comes to oil and gas. This is dangerous, okay? Because as much as I would love to say we don't need fossil fuels anymore and we're no longer addicted to oil and gas, the reality on the ground is different, all right? And if you think I'm kidding, go outside your house. Everybody who's got a natural gas line in their house, take a wrench, go out to your gas line where it comes into the house, and turn that little valve 90 degrees and see what happens. It's going to get cold in your house. Your water's going to get cold. You're not going to be able to cook, right? Because we're all still using it. And for her to just say because of ESG mandates, because of the political ideology of the people who are in charge of most of the wealth in this country, we're just going to let oil and gas supplies dwindle until we all have a problem. And we're starting to see that we do all have a problem. I'll get to that in a minute. But I want to finish Kathy Wood's ridiculous series of tweets before I do that. The rise in oil prices this year is a function more of supply than demand. At the turn of the 20th century, whale oil faced the same fate, and whale oil prices fluctuated dramatically. So she's saying it's a function more of supply than demand. Well, the demand hasn't really changed, Kathy, right? Like, demand is almost back to pre-COVID levels. So the supply is starting to dwindle, and the demand is on the rise again. So what are you even saying here? And to compare it to whale oil, look, it's not like the world didn't suddenly need the lamps and the candles and the soap that was made from whale oil. It's just the world started making that stuff out of petroleum, out of oil from the ground. That's why they stopped hunting whales for energy. And, you know, look, whale oil was archaic, but to make the comparison between the modern power grid and modern fuel supplies and petrochemical needs outside of energy, to compare all of that to whale oil, you're kidding. No, tone deaf doesn't even begin to cover it. If ARK Invest's research is correct, oil prices will suffer the same fate as whale oil prices. You better hope you're right, Kathy, because people who think like you are shutting off the flow of money into research and development and energy infrastructure, and we're starting to see what that looks like. So here's what I want to talk about. 3 more UK energy companies go bust. All right, this is the result of this wishful thinking of this ESG energy policy. All right, you've got 3 companies. The UK is in an energy crisis right now, and I want to read a little bit off of this article. Bear with me, folks. Here, I have to zoom in. This is feedback from Mrs. Special. She said I should zoom in when I read articles, so we're going to do that. Energy suppliers Enstroga, Igloo Energy, and Symbio Energy have joined an ongoing list of companies that have collapsed in recent weeks amid the surge in wholesale gas prices. These companies have collapsed. Regulator Ofgem confirmed on Wednesday that the 3 firms, which together represented less than 1% of domestic customers in the market, had ceased trading. Customers will continue to get energy supply despite the news, and funds paid into any accounts will be protected where they are in credit. So what's going on in the UK is these domestic energy companies, let me make myself a little bigger here. These companies are going bankrupt because the UK has caps on how much they can charge for their power, all right? Let me just say here, price controls never work, okay? Price controls, they don't work, all right? It creates shortages or it creates other economic problems. And these companies going bust in the UK is a perfect example of that. They put caps on how much money they're allowed to charge for power. Well, what happens when the cost of power is more than what they're allowed to charge? Well, those companies start losing money. This is where monopolies come from. These power caps or these price caps that were put in to protect consumers, all they've done is they've killed smaller competitors. Now, those companies are out of business. The larger companies that can take the hit in the short term are now going to buy up their businesses at pennies on the dollar, and you're going to have fewer players in the UK energy market. So what's going to happen is, as this plays out over the coming months, you're going to see a lot of these energy providers are going to go bankrupt. They're going to be bought out, and the UK is going to be left with 2 or 3 choices to get their power. You're going to have a monopoly, and then the consumers are royally screwed. Okay, so these price caps that are supposed to protect consumers, price controls don't work, folks. And this is what happens. You get companies go out of business. So this is happening because natural gas prices are going up, electricity prices are going up. It's not because of Brexit. Look, there's been no capex. Oh, now I'm messing with things. Sorry, folks. Let's move me over here. And there's a reason for this is going on, and And I promise you I'm getting to a point here. The charts in this article here, it summarizes how over the last 10 years there has just been no capital investment in our energy infrastructure in the U.S. Now, part of that is due to lousy returns because with the discovery of shale oil in the U.S. and with the fracking boom in the U.S., commodity prices went down so much that these companies were not really making a lot of money and they weren't really good investments, especially not when you could put your money into the FANG stocks and make a 10x on your investment over the years. But there's also been this other problem of this ESG, and basically banks have been saying, we don't like your politics, we don't like the optics of this, so we're not going to lend you money for oil and gas exploration or to build out the oil and gas you've already discovered. And I want to zoom in here. This first chart shows you the flow of money into sustainable equity funds and sustainable fixed income funds. All right. And look at this over the last year. Look at how hundreds of billions of dollars. Now, that keep in mind, this is your money. All right. This is your pension. This is your 401k. This is BlackRock and Vanguard, and your pension funds are taking your money and they're putting it into these sustainable equity funds because they like the political optics of it. All right, so keep in mind when you see this chart, this is not somebody else's money. This is your money. And now look at this next chart right below it. This is the S&P 500 energy sector capital expenditure. And look at the cliff in 2015 when CapEx just fell off a cliff. Now, there's a big reason for 2015. That is when Saudi Arabia started flooding the oil market with crude to try to put American producers out of business. That's when Saudi Arabia and the OPEC countries realized, hey, the U.S. is producing so much energy now, we better do something about it or they're going to steal all our market share. So that hit CapEx. But you also had the onset of this ESG trend that has also caused this massive decline in CapEx and energy. And then this chart here, this is interesting. This is the S&P 500 CapEx in the energy sector as a ratio of depreciation of assets. All right, now that's a mouthful. But this basically, how much money they're investing in new wells and new infrastructure divided by the rate at which the old infrastructure is decaying away. Okay, that's one way to look at it. And if you look right here, we are down at 43%. That means they're only spending 43 cents on new wells and new exploration for every dollar of old well that gets shut down or depreciates. All right? This is a long-term recipe for disaster in the energy markets. And I just want to point to this last chart here. This is S&P 500 energy. All right, this is CapEx and oil production, where red is your total crude oil production and blue is your CapEx. And if you'll notice, they're offset by about 5 years because oil and gas takes time to drill for it, takes time to build out the wells, takes time to build out the pipelines until it finally gets flowing. And you see that in 2015, that CapEx fell off a cliff. And it continues to fall off a cliff. And U.S. gas production has only now, in 2020, 2021, begun to decline. And if you look at that big drop in CapEx, which has not slowed, we have a big decline in domestic energy production ahead of us in this country. All right. And this is having impacts globally. I've just been talking about U.S. CapEx and U.S. investments in energy. Well, look what's going on in China. China has rolling blackouts right now because the price of coal has gone up so much in China. They're shutting off power to their factories. You think that's not going to hit Tesla earnings? That's not going to hit Apple earnings? Where are all the parts for your iPhones made? Where are the parts for those Teslas made? In China. So these rolling back blackouts in China, you better bet that's going to impact the earnings of S&P 500 companies. Keep in mind, we've got an inflation problem, right? Well, the inflation problem hasn't really seen much energy input to it, has it, recently? It's going to change soon, right about the time that these rents are expected to start going up or the owner's equivalent rent is going to start going up in these inflation reads. So folks, there's some pain on the horizon coming from this energy issue, and it's going to hit you this winter. All right, you better plan on having some very high heating bills this winter. All right, if plan on at least double. If you were paying $200 to heat your home last winter, plan on paying $400 this year, because natural gas costs. I mean, let's just go right over here to natural gas. Here is a 1-year chart of natural gas. We started the year about 370, and right now we are at about 560. Now, there's some real volatility going on right here, up and down these last couple of days. It's not really sure which way it wants to go, but these gas prices are probably heading higher. Especially, there was news yesterday that China was telling its energy providers to secure coal and gas supplies at any cost for the winter. You think that's not going to affect the U.S. natural gas market? You're crazy. Because where does China get its natural gas from? Well, they buy it in the LNG markets. They get it from Qatar. They get it from Australia. And yes, they get it from us. Right? We liquefy natural gas and we export it here. I want to just read a couple of comments here. Wide Winger says, good thing we've been adding solar power and battery backup for power. Well, I hope you don't need power at night, because solar panels don't work at night. And the battery backups help, but not quite. It's quite simple. The new government money printed needs to be spent on overpriced green energy projects. Modern corruption works post-payment. When the politicians retire, they're employed by the benefactors. Pretty well said, Mike. I agree. Now, there's one other thing I want to talk about real quick, and that is negative energy prices. All right, and I did my video a few days ago about how wind and solar was intermittent, and that focused most on when wind and energy didn't work when you needed it. Okay, now there's a flip side to that coin. Sometimes you get wind and solar working when you don't need it. Okay, so say it's the middle of the day, it's sunny and it's windy, but it's a holiday and the factories are shut down. Those windmills and those solar panels are feeding power into the grid when the grid has low demand. And that's when the grid turns into a load shed moment, or a load shed mode, where there's too much power coming in, and that is every bit as dangerous to the power grid as not enough coming in. When the grid is feeding more power than there is load, you can have blackouts. So what happens, we have, deregulated energy markets where the power prices drop and drop and drop because the grid operators don't need it, to the point where the power prices actually go negative, where you have to pay to keep operating. They charge you to put your power into the grid because there's so much power coming in that there's nothing to do with it. Well, if you're a nuclear plant or if you're a coal plant, you can't just start up and shut down on a whim in accordance with what the power grid needs. All right? These are base load generators, right? When they shut down, it takes them hours, sometimes days. Like a nuclear plant takes at least 2 days to come back up after a shutdown. Not as long for coal, but they can't just shut down and start up on a whim. They're on or they're off. And when you have days where you have low energy demand and all of these windmills and solar panels are pouring juice into the grid, the power goes negative. The price of the power goes negative. Now, those windmills and those solar panels, those get generous government subsidies, so they can stay profitable even though they're paying to put their power into the grid. The coal and the nuclear plants can't. They're losing money, big time. And that makes those baseload assets that are vital during those big cold spells or those big heat waves, that makes them less economical. All right, and if we keep losing coal plants and we keep losing nuclear plants, we're going to end up with a situation like we had in Texas over this last winter, where the grid fails. And when the grid fails during a freezing spell, that means major damage to infrastructure, and that means lives lost. So that's one more thing that you got to keep in mind with these ESG investors. It's not just that they're not there when you need them. They cause problems when you don't need them. Just throwing that out there. All right, moving on. I think we've beaten the energy horse to death for today. So we are going to close a few of these up. Now, Bitcoin, shifting gears very abruptly here. Can somebody please tell me what happened this morning in Bitcoin to make sense out of this chart. Let's go to a 1-day chart. All right, let's do 5 days. Okay. Make sure you can see me. This is Bitcoin. Move my big fat million. What happened this morning? I was reading all these articles today, and like I'd love to be able to tell you, oh, here's why. Here's why Bitcoin rallied almost 10% today. Like this is a finance channel, and I'd like to think that, I can at least give you information from time to time. But folks, I am stumped here. I have got nothing. There was no explanation for it. China didn't suddenly repeal their ban. I mean, El Salvador didn't suddenly buy thousands of Bitcoin. All right? El Salvador is just a talking point. It's really immaterial when it comes to the size of the Bitcoin market. It's a symbolic story. I don't know what this is. End of quarter rebalancing, maybe. I just don't. Somebody bought a ton of Bitcoin today, and it happened in the morning. And I don't know. I mean, it's kept going up today. I guess Bitcoin is predictable like this. When you get a big price run up, you tend to get FOMO buying. So maybe that's this last few hours as it's bounced around and continued to work its way up. But what is this? What is this at 6 a.m.? That doesn't look natural to me. All right. And this is why if you think you're going to time the market in Bitcoin, you're crazy. All right, because Bitcoin can move 10% on nothing, just out of nowhere. And it doesn't make any sense to me, but there it is, folks. 10% within a couple of minutes. I think this was like a 20-minute time span. It rallied 10%. So that's why I've always told you, folks, don't try to be a market timer with crypto. My approach has always been I dollar cost average in. I buy a little bit every week. All right. My other approach, I also mine Ethereum. And again, Ethereum, big run today, 6 o'clock, up 10%. I mean, this is the Ethereum chart now. I cannot explain this run up. I'm happy to see it. I'm invested in Bitcoin. I mine Ethereum. So yeah, I like to see the price going up, but when I can't explain it, it makes me nervous because that means it could come back down just as fast as it went up. So that's why I always say, don't try to be a market timer. I guess this is a good time for me to cover my butt. Don't touch a trade based on what you hear from me. I'm not a financial advisor. Do your own research, your own DD, arrive at a decision that's right for you based on your unique situation. That being said, my approach to Bitcoin for the better part of this year has just been I dollar cost average in. I buy a little bit every week, and I mine Ethereum. So I guess technically I buy a little bit of Ethereum constantly. Right? When I'm not streaming or recording, I use this computer to mine Ethereum. It's not quit your day job money. It makes me a couple of bucks, but I'm in this for the super long term, and it lets this asset, this computer, generate a return for me when I'm not using it. So what again, not financial advice, but what I do, I use this app called Swan, which I have been very happy with Swan. I've been using this since February. They have low fees and they have good security. And I set it to automate. I don't look at the price. I buy a little bit every week. I will put a link in the description to this video. If you want to check out Swan, you will get $10 in free Bitcoin if you sign up. Full disclosure, that is an affiliate link. And I promise you, I will always tell you when I'm using affiliate links. I will always have all my cards on the table. But again, I stand by the service. I use it myself. What I do is I make these regular purchases, and then once I've accumulated a certain amount, I pull it off of the exchange and I put it into cold storage, which leads me to my next point. All right. If you are leaving your coins on the exchange, you need to understand when you when you leave your coin, your Bitcoin, your Ethereum, whatever, when you leave it on an exchange, you're basically saying you're not holding Bitcoin, you're holding an IOU. Okay. Say you buy your Bitcoin on Coinbase and you don't pull it off and put it into your own wallet. Then you don't own Bitcoin. You own an IOU from Coinbase's wallet that says they owe you Bitcoin. And the reason I say that is because this story came out today Coinbase discloses that 6,000 customers got hacked this spring. 6,000 customers. And the story came, it didn't give any numbers about how much Bitcoin was stolen, but 6,000 customers, that is a significant number of their customers. Access was gained to their account. Somehow it was a flaw in the multi-factor authentication, and they were able to either social engineer their way in, or somehow they stole enough data to get people's emails, passwords, and multi-factor authenticator, and they got in and they emptied these accounts. Now, Coinbase is saying that they are going to reimburse all their customers who lost anything, which, good luck going through that. All I've ever heard is that Coinbase, it's impossible to get a human being on the phone. So I don't know how they're getting reimbursed. But remember, when you leave your coins on the exchange, this is a possibility, right? I keep my coins in cold storage. There are no private keys. There's nothing to steal. It is mine. I hold it. I own it. It's all on me. I don't have, there is no counterparty risk involved whatsoever. So that's how I store mine. If you're leaving your coins on an exchange, you need to read articles like this. I'll just put it that way. Let's see. Could it be a way to get retail to FOMO in and then trigger another dump? Whales just playing noobs for fools. Zeeble Fritz, that is very possible that is what's going on. It's possible that a couple of whales just bought a whole bunch of Bitcoin, and the whole point of it was to lure you in, unsuspecting investors, to lure you in and to get you to buy so they could dump. And that's why I don't try to time the market, because we have seen this in the crypto markets where these whales play games. And if you're a Bitcoin whale, if you bought a couple $1,000s worth of Bitcoin in 2009 or 2010, you're sitting on hundreds of millions of dollars right now, and you have enough liquidity in your account to move markets if you decide to. And I can't say that's not what happened this morning. I can't say it wasn't some whale that just dumped a few million into Bitcoin in a couple of seconds. I can't say it wasn't the guys at Tether doing something, or who knows? Nobody knows. And I'm not going to be another one of those pundits sitting there trying to BS my way through it and explain what that was. There is no explanation that's available to the public on why Bitcoin ran like it did this morning. And so if there's no explanation why it ran, it could just as easily sell off. So, and then Wide Winger says, where is the outrage for such a rise in value? That is a fair question. Nobody ever gets angry when their investment goes up in value, Winger. But I can tell you it did make me suspicious. It didn't make me angry, but it made me suspicious. If it goes up for no reason, it can come down for no reason. And we got, let me read this name. Smoking you like a boss. AMC is going to the moon. Let's take a look at AMC, Smoking. I hadn't seen anything on that, but I hope you're right. And I would just love to talk about AMC. Let's see. Oh, 43 cents. I'll take it, but it is a moon. 'Tis not. It's not a moon. AMC had a nice little run up yesterday afternoon. I don't know what that was all about. Again, not the MOAS, not the moon. How about that AMC story? With Vlad Tenev and let me see if I can find that image. AMC sold. The name of the app, Robinhood. Thank you. Where is it? Bear with me for a second, folks. I want to see if I can find this. Well, I can't find it here, but it was a big story. It was a big story this week that it was the hashtag Citadel lied or Ken Griffin lied. They found email exchanges back and forth between Robinhood people where I guess it was like the president of trading, one of the higher up execs at Robinhood, announced in an email that he had sold his AMC shares, his personal AMC shares, a few hours before Robinhood took it to position close only in January, back when they screwed their retail investors and said you can only sell the stock, you can't buy it, which I am yet to hear any legal basis whatsoever for that garbage. And this guy sold his personal AMC stock using non-public information that only he and his execs at Robinhood had to protect himself from a loss. Folks, that is insider trading. That is the definition of insider trading. And it is right there for all to see in that article or in that legal filing. If that guy does not end up in handcuffs, there is something majorly wrong with this world. Oh my goodness, Dumb Money Media. I just got my first super chat ever from Dumb Money Media. Thank you, Dumb Money. That's a great name. I love that. I love that name, by the way, Dumb Money Media. That is awesome. Thank you. That is my first super chat. I've never gotten one of those before. This is the first week my channel's been monetized. So I need to hurry up and make a vid on Evergrande. I still got a few silver vids pending right now. Love the vids, man. Keep on the grind. Thank you, Dumb Money. That was very generous of you. Thank you for supporting the channel. Folks, I don't know if you have followed Dumb Money Media's channel before, but he does, I guess I could call him, can I call him satire vids, Dumb? I don't know if that accurately justifies them. Let's bring up his channel real quick. But he has done some very funny videos in the past. Here he is. Let's shrink my big fat melon. This is Dumb Money Media's channel. He is very underrated. Some of his videos have been pretty funny. I'm going to call it satire. All right. I don't know if that is accurate. I don't know how else to describe it. But he did some stuff about the Federal Reserve, some videos about the silver squeeze. And if you're doing a video on Evergrande, I am definitely looking forward to that, Dumb, because the Evergrande story just, well, that defies belief. And we're going to talk a little bit more about Evergrande in over the next few minutes. But thank you. Thank you for sending me the super chat. That was awesome. I appreciate the support for the channel. Yeah, very much satire. Okay, good. I'm glad I didn't offend you by describing it as satire. Once again, thank you. And that was a great segue, by the way. Talking about the crooks dealing with AMC, now moving on to the crooks at Evergrande. I saw this article, and this, boy, I tell you, it pays to play poker with the right people. And when I saw this article, it just made sense. I don't know if you guys remember, I did a video a few days ago about Evergrande, how they sold their bank. And I just remember saying, who in the world would buy a bank from these people? It made no sense to me. These were the least trustworthy people on the planet. And why would anybody want to buy a bank from them? And then I read this article, and it made sense. And, oh my God, I just got another one. Robin, thank you, Mike. Robin RC Models. I just wonder, when all those Evergrande suppliers go bust and the suppliers to all the overseas corps leave China, what will happen to the markets? That, Mike, that will be absolute mayhem when that happens to the markets, because China is just this glutton of materials and commodities. They eat half the world's concrete, half the world's copper, half the world's steel goes into their building of buildings that nobody needs, that nobody lives in. And that's why I said earlier in this live stream that I honestly have no idea what's going to win out in this big tug of war between the major hyperinflationary forces at work in the United States, with J-Pow and his printer going burr, and then this massive $52 trillion housing and building market in China that's about to collapse. These two forces are so hugely, immensely powerful, and they have opposite effects on currency values. And I don't know which one's going to win out, and anybody who tells you they know is full of it, because we have never dealt with numbers this big ever before in human history. And whenever, let me just clarify a little bit, Mike, in your comment. And thank you again, Mike, for your super chat and for supporting the channel. That's awesome. You and Dumb Money both, thank you guys. You're saying when Evergrande and their suppliers go bust, I just want to emphasize, Evergrande is only the symptom. Okay, Evergrande is not the disease. The disease is the Chinese property bubble. and the corruption around it and the growth at any cost and the way the Chinese Communist Party has handed down these GDP mandates to their regional governments, and it's forced the regional governments to borrow ridiculously through these local government finance vehicles to continuously meet their targets and their demand to rise in the good graces of the Communist Party. And it's just caused this ridiculous boom of buildings that there's no use for. There's no need for any of these buildings other than to just build them. Like, do you ever watch Fraggle Rock, the Doozlers? When I was a kid, I loved Fraggle Rock. And there were these little green and blue guys, the Doozlers. And they were these construction workers. They had no eyes. Their hard hats covered their eyes. And they just built. They never knew what they were building or why they were building it. They just kept building. And the Fraggles liked to snack on the Doozler sticks. The Fraggles would come in like Godzilla and tear down the Doozler buildings and eat the beams that they were made of. And when I see this Chinese building and all the ridiculous construction just for the sake of construction, it just reminds me of the Doozlers and the Doozler building buildings for the sake of building them. If you're going to build something, make it something somebody wants, something somebody needs. Don't just build it for the sake of building. It's stupid. So, yeah, that's going to cause some real havoc when that happens. But I want to get back to this story. Mike, thank you again for the super chat. Guys, thank you for supporting the channel. That is awesome. China, I'm going to read you from this article in Bloomberg. China's purchase of a stake in a struggling regional bank from China Evergrande Group aimed at preventing contagion is also benefiting Shenzhen Bank Company's investors, including some poker pals of Evergrande founder Hui Kai-yan. Evergrande agreed to sell a 20% stake in the bank to the local Shenzhen government for 10 billion yuan, or $1.5 billion, with the bank demanding that all proceeds go to settle debts with the lender. And there is the operative statement, okay? With the bank demanding that all proceeds from the sale go to settle debts with the lender. So Evergrande owns the bank, and Evergrande owes money to the bank. Evergrande sells what they own of the bank to the government. The government gives them money with the stipulation that the money they get goes to pay back the bank that they just sold. It's circular here. So basically the government bailed out Evergrande with the stipulation that Evergrande pay back the debt that was owed to the bank, which is now owned by the government. So the Chinese government gave money to Evergrande in exchange for the stake in the bank. Evergrande gave them the money right back. So who wins? The people who owned the rest of the bank. And that just turns out to be all these names of all these Chinese billionaires: Cheng Chung-Q, the Cheng family, Paul Suen, Karen Lowe, all people who play poker with the founder of Evergrande. And again, I've said it before, China, this great communist collective where everybody shares, and thank God they don't have the greed and the corruption that they have in the West and those greedy capitalist pigs, right? No. See, in communist economies, the people who always live very well are the communists themselves, the Communist Party leaders. They live like the billionaires. It's everybody else that gets screwed. And while I was sitting here the other day making this video wondering why in the world anybody would buy a bank from Evergrande, well, now I understand why you would buy a bank from Evergrande, because Evergrande owes you money and they're going to give it the money right back to you just as soon as you buy the bank from them. So the Chinese government bailed out the shareholders in the bank. They didn't bail out Evergrande. They bailed out the billionaire shareholders who own the rest of that bank. And it just stinks of corruption. Thank goodness the communists aren't as greedy as the capitalist pigs in the West, right? Thank goodness that kind of corruption doesn't happen. Oh, just terrible. And I can't remember who it was, but somebody on this channel commented on one of my first videos on Evergrande a while back that it had hit Sweden. And I remember reading that and thinking that was interesting. And I meant to circle back to it, and I never did. And I should have, because here I see the article today. It's actually dated Saturday, October 2nd, and it's still Friday, October 1st. Someone could explain that to me. Apparently, the Taipei Times has invented time travel. I don't know. Is it Saturday in Taiwan already? That's possible. But Evergrande woes hit Sweden as EV unit seeks buyer. China Evergrande Group's financial woes has spilled over to Sweden, with a unit of the company's electric vehicle arm in talks to find new backers after cutting 300 jobs. And that is this company Nevs, Nevs, which is, I guess it's based at a former Saab factory in Sweden. And they had 670 employees, 300 of whom just got laid off because of Evergrande. So, Mike Robin, on your comment, wondering what's going to happen when Evergrande and the suppliers go bust. Well, there you have it. You've got 300 folks in Sweden just lost their jobs because of this Evergrande crisis. So maybe that's not the global contagion that's going to bring down the whole world economy, but to those 300 people, that's a very big deal. And I also wanted to call attention to this article I saw. Developer Sunak seeks support from Chinese city to stem slowdown. Now, this was very interesting. It was going around in Chinese social media that this developer Sunak, which is not as big as Evergrande, but still a massive company. I think they have like 150 billion US in liabilities. Well, there was leaked a letter from Sunak to the regional government begging for policy support. And in this letter, they had mentioned that the local real estate market had frozen. Not that it had slowed down, but it had frozen. And that's an important thing, because think about it. If you've got 45 years worth of your salary saved up in cash, how? I don't know. But say you borrowed from mom and dad, everybody, your neighbors, and you're about to buy a house. Are you going to buy a house in China right now? Hell no. Hell no. Not with the market about to collapse. So when the executives of this company, Sunak, said the market had frozen, take that at face value. I think that means what it says. I think there is no sales going on. None whatsoever. And these companies, their sales went from declining to none. As in, nobody's buying nothing right now. And if you're a Ponzi scheme Chinese property developer who you take deposits from people for homes, and instead of putting it in escrow like you're supposed to do and being a good steward of their money, you use that to buy land for your next project, and now you have no cash to finish the build for that property you just took a deposit on. Well, if sales slow down or if sales freeze, that's a big problem. And what happened was Sunak was real quick to go on the defensive, and they said, oh, no, that was just a draft letter. We didn't mean to send, that wasn't meant for release. As if, like you're caught in a hot mic saying something terrible about your company, and then you're like, oh, my microphone wasn't even supposed to be on. That's like brushing aside the fact of what you said. Like, you got caught. And to say, oh, it was just a draft, it wasn't meant for release. Well, you still said some pretty gnarly things in there, like the market is frozen. That's a big deal. Dumb Money Media, again, thank you, sir. Thanks so much for the shout out, man. I really respect you. I do like the videos very much. And, folks, again, I will put a link. I'll go back and put a link to Dumb Money Media's channel in the description of this video. He's got a video about Evergrande coming up, and I am really looking forward to it. Dumb, shoot me an email. Maybe we can work something out about that. That was awesome. But I just want to get back on this story about Sunak seeking support from the Chinese city to stem the slowdown, because they got caught and they got called out on it, and their defense was that, oh, it was just a draft. Property developer Sunak China Holdings has asked for special policy support from a city government to stem slowing sales, underscoring challenges faced by once high-flying companies. And I'm not going to butcher it, but basically I butchered the pronunciation here, folks. I'm sorry. I don't get out much. I live in rural Pennsylvania, and my Mandarin and my Cantonese are non-existent, so I can't pronounce any of these terms. But Sunak said on Tuesday, however, that the document was a draft memo sent in error last Friday to a local social media group about real estate. Well, just because it was a draft and it was sent in error doesn't mean you didn't write it. You still wrote it. So what's up? And then the company executives are saying, our company has never in the past and never will have any need or intention to submit a report like this to the government, Sunak reported, apologizing for misleading the public about the matter. Yet you wrote it. You still wrote it. If you have never in the past and never will have any need to submit a report like that to the government, then why did you write it? Why did you make a draft of it to begin with? And here's some of the things that were said. Now, again, it was not written in English, so this is somebody else's translation. Just want to say that. But what the letter said was, we earnestly request the government to provide us with special policy support as it is difficult for daily operations in Shaoxing to move forward and the situation is deteriorating daily. Cash flows with the project have encountered very large hindrance and difficulties, the memo said, adding that with the support from Sunak diminishing, the heavy operational costs had forced the project into an impasse. It estimated that the company had 11.7 billion yuan of cash tied up in the project and 7 others around Shaoxing. Anyways, what this article is basically saying, folks, is that, again, it's not just Evergrande. What's going on in China is not just Evergrande. Here you have Sunak, which is one of the largest. I think it's one of the top 100 largest in the world developers, and they're running out of money too, and they're unable to sell their projects, and they're unable to finish their projects, and they're asking the government for help. And this is, we had that other company, Cynic, earlier last week went down, and supposedly there's been like 270 developers have gone belly up this year. And then I have this article in the Asia Times, China's property crisis bigger than just Evergrande. People's Bank of China calls on banks to help stabilize land and house prices as more developers show signs of financial stress. And this article talks about Evergrande. It talks about Cynic that I just mentioned, but here's another one here. On September 26th, Huizhou Guang Group, we'll call them HGG. HGG, once among China's top 100 property developers, was declared bankrupt by a court because it failed to implement a proposed debt restructuring plan. Its total debt amounted to more than 20 billion yuan. Company chairman and co-founder, this guy, fled the country and is now wanted. Wow. Company chairman and founder fled the country and is now wanted. Thank goodness in Chinese Communist Party rule we don't have those greedy capitalists, right? Thank goodness they all share over there. Has fled the country and is now wanted. And this HGG, right, Huizhou Guang Group, I don't know how to pronounce it. I apologize, folks. I'm not trying to make fun of them here. I can't pronounce it. I never even heard of this story until today. That was on September 26th that they went bankrupt. That was, 5 days ago? Just heard about it today. And, 20 billion yuan, what's that? About $3 billion? All right, that's, again, it's peanuts compared to Evergrande, but a $3 billion company going belly up is not a non-story. And the fact that the chairman fled the country and is now wanted, how does something like that get overlooked by the mainstream press, unless the mainstream press refuses to cover it because they don't want to upset Chinese Communist Party censors? Maybe that's why it's so hard to get information out of these people. And then they also talk about Sunak here and how they raised alarms asking for special policy support. So, in a nutshell, folks, you got the Evergrande story. It's already spread to this Cynic company, and now this Sunak company and this HGG group has gone belly up. So the developers, the dominoes are falling. And if there's one thing you take away from this whole segment, remember, it's not just Evergrande. Evergrande is just the symptom. It is one of many dominoes. And the problem is this $52 trillion real estate market in China and how it is systemic. And this is on purpose. This is not an accident. China has recognized that they had a real estate bubble. They recognized it way too late. They put in this 3 red lines policy to limit the amount of new debt to make sure that the bubble didn't inflate further, okay? And by limiting further inflation, they have exposed that some of these property developers were Ponzi schemes that are dependent on new money coming in to pay the old investors, right? Just the way Bernie Madoff was exposed when the stock market started to go down and he had new investors started to dry up and he didn't have the money to pay his old investors. It's the same thing happening. So, again, Evergrande, just the tip of the iceberg. This story is going to get bigger. Yes, it's on purpose. What the Chinese are trying to do is they're trying to slowly deflate the housing bubble without popping it. Kind of the same way Ben Bernanke tried to slowly deflate the housing bubble without popping it in the U.S. with his rate hikes. It didn't work. All right, he just popped it sooner. He just sped it up. And I'm not really sure the Chinese are going to be any better at handling this than Ben Bernanke was. If history is any judge, they're going to be a lot worse at it. So that's just my take on it. I'm going to read a couple of these. Zeno Lamont, that's a very good point. Energy is the black swan that pops the bubble. If builders are having trouble now, imagine what happens if their fuel costs go up. Zeno, that's a great point, right? Because cranes and bulldozers and everything else needs oil and gas, right? It needs fuel, and energy is a big input to building costs. So that's a very good point. China and Hong Kong stock market closed due to national holiday. People have been buying the crypto dip. That's interesting, PF, because they're supposed to not be allowed to buy the crypto dip. That's supposed to be illegal in China now. The one thing I was thinking about trying to explain the crypto run today is maybe China has done all the damage they can to the crypto market. So like the big black swan that's still out there in the crypto market is the stable coins and Tether. And if that ever blows up. But outside of that, I think Bitcoin has already had all the bad news it's going to have for a while. So maybe that's why this big buying spree today is it's just people realize like we found a bottom, short-term bottom. It got as bad as it's going to get. And being banned in the second largest economy in the world is a pretty big bad story, right? And now that that's behind us, maybe people feel like it's safe to buy. I don't know. I'm just theorizing out loud here. Stack those AG ounces. That's right, Bovine. And I didn't talk about that, but gold and silver have just been brutalized these last couple of weeks. Much in the same way, my approach to Bitcoin, my approach to gold and silver has been to dollar cost average in. I buy a little bit. I buy physical. I stopped messing around with derivatives. I still hold some mining stocks, but I'm not buying any more mining stocks, even though they look ridiculously undervalued. I saw a very interesting article on Liberty and Finance. There was a video on the Liberty and Finance channel with Steve Penny, the silver chartist, talking about the Dow to gold ratio. And during the last market crash, the Dow to gold ratio bottomed at, I think it was 2, where the Dow was worth 2 ounces of gold. Or he had even mentioned it in 1980, it went down to 1, where the Dow went to like 850 and gold was at 850. Well, if we were to get a major market crash right now and we were to get a Dow to gold ratio of 1, well, what is the Dow at? About 34,000 and gold is at about 1,800. So say they met in the middle, that would be what? A gold price of about $18,000 or $19,000. Dow down below 20,000. So if Steve Penny is right and that during the next major market crash, the Dow to gold ratio will go to 1 or 2, that means there's a pretty big run in gold ahead. So I'm not saying to trade that. Again, not a financial advisor. Do your own research, your own DD, arrive at a decision that's right for you. But I remember running the numbers when Steve Penny was talking about in the Liberty and Finance to do the Dow to gold 1-to-1. And yeah, that is a major run from today's prices. That's for sure. I was laughing so hard when I found out that Evergrande sold cars. How many years does it take to get your steering wheel after you buy one? That was Dumb Money Media. That was a great comment. Yeah, you can buy the car from us now. We'll send you your steering wheel sometime between now and 2030. Oh, that is great. I have the best followers. I have the best viewers. This is hilarious. The Fed will also be even more hopelessly trapped if energy crunch keeps up. Epic stagflation, their usual playbook, will just make things worse in that environment. Another good one, Zeno Lamont. I agree. Energy has kind of been absent from the inflation discussion over the last few months, and we're at what 5.5, 5.4 on the CPI numbers right now, and inflation really hasn't been a very big input to. I'm sorry, energy has not been a very big input to inflation this year, and that's about to change. And I don't know if they're going to just start changing the stats, or are they going to the headline is going to be more of that X food and energy, the inflation with food and energy stripped out. Are they going to start headlining the core number and say we're not going to track energy anymore? Like, Anytime the statistics don't say what the Fed wants them to say, they change the statistics. So suffice it to say, life is going to get more expensive because energy is an input to everything. Energy is an input to food. It's an input to commodities. It's an input to finished products and durable goods. Everything uses energy, folks. So even if they start stripping out energy from the inflation story, energy is still going to drive up the price of that other stuff that uses energy to get made. So keep that in mind. Anyways, folks, it is 4:20 p.m. That is a fantastic place to stop this live stream for today. I want to thank you guys so much for your time and for spending Friday afternoon with me. I think we're going to make these Friday power hours a regular thing from now on. Thank you, Dumb Money Media and Mike Robin, for the super chats, guys. That was awesome. I really appreciate the support. And Dumb, I'm really looking forward to that video on the Evergrande fiasco. So please send me an email when that comes out. Guys, don't forget, hit that like button, subscribe to my channel. Also, Mrs. Special has insisted that I ask you to please share this channel on other social media outlets and try to help get the subscriber count up. That would really help me out also. So if you guys could do that, I would sure appreciate it and be forever in your debt. Folks, in the meantime, live small and dream big.